Hey traders, welcome back to another Sunday video where I take a look at setups for the week ahead and talk about current things that I'm trading or watching in the markets. And this past week was a frightening one for markets. We saw a big sell-off in the stock market following its recent advance from the lows in August of last month. Seems eerily familiar to have such harsh sell-offs following an NFP report. That's exactly what we saw last month, and in this video we're going to be talking about whether or not this playbook has changed, if we're going to do anything different this time, or is this just another buy the dip opportunity where we rip after the NFP fears? We're going to be breaking all of that down in today's video. I'm going to be talking about indices. I'll look at some currencies, and I'll, of course, take a look at gold as well. But I wanted to start where kind of the iron was hot, if you will. We had the Nasdaq down almost 3% here on Friday. And, of course, the S&P 500 also seeing a 2% decline. These are not messing around kind of numbers, and I want to discuss what was so concerning in this market, because depending on who you ask, some people found this number on Friday, the NFP number, to be not absolutely terrible, and we'll make a case for that, and other people found it to be very, very frightening. Dollar index was about flat on Friday, and then on gold we saw a slight downside move, and of course I thought that was interesting considering yields actually tanked lower. So we'll discuss all of it here in today's video. I just want to say, if you enjoy my videos, enjoy my commentary, I do put a lot of effort into my videos, and if you're new to the channel, consider subscribing if you want more fundamental and technical analysis each week, as well as hit the thumbs up button if you have not already. It really does help to support my channel. I also want to just go through, I do like to keep it real on my channel. I like to show you guys, my real P&L every single, chance that I can, really, just to discuss what I've been going through. So I had some interesting, performance in the last few months. I actually, although, this has been kind of a frustrating period, I'm actually quite thankful for where I'm at with my P&L for the year. I am very positive. Still not a huge year. I'm only up 8.1%, which is not remarkable and kind of a sort of subpar year for me, but it's been a tricky year, to be honest, and I want to talk more about that, but just wanted to show you where I'm at. I had at one point, gains of up to 136,000 on this account, which this is my public account, and have given back some of those gains, but we saw the big slide last month. And I want to talk a little bit about my move this past week, which is where I'll start. So if I go over to the charts and we take a look at the S&P 500, some of you guys might remember the buy trade that I took about a month ago on the S&P 500, right around these areas. I put a stop loss just down here, and with this market ripping higher, I was able to catch a very nice trade on the S&P 500. I actually trailed my stop loss just below this market structure low. So after we formed this low here and pivoted off of it, I put my stop loss just here, and I basically said, hey, you know what? We've had a really nice pop here. We're going into September bearish seasonality, which I'll discuss in just a moment. And basically what happened is seasonality kicked right in. We saw a big slide to the downside and ended up stopping out of my position. And I got to say, this week I didn't have a lot of positions on, and I was very grateful for that. I would have given back at this point. Actually, we could do a quick calculation. If let's just assume roughly my entry was here, I would have given back almost 2/3 of my entire gain on the position at one point. Instead, I gave back maybe about 20%, 25% of the gain. So I can't complain whatsoever about that, and I feel pretty good about my trailing stop strategy after that. Kind of blip to the downside, took me out, and at first I was like, well, sad to see the trade go, but I'm feeling very glad that I saw the trade go when I did. So in a weird way, guys, the market was down 2%, and today I was pretty much flat on my account. So in a weird way, it's almost like I didn't make any money this week, but I did the best thing I could, which was I took profits when I was supposed to, according to my rules. And I'm patting myself on the back here because you have to re-engineer for the way you guys think too at home. You got to think about this stuff. Sometimes you just say, hey, I didn't lose money today. Everyone else got smoked today. Down 2%. A lot of people are long. A lot of tech stocks down 3% today. Would have been a rougher ride. And that has been me plenty of times. But on Friday, I avoided the big sell-off, which was, a blessing for sure. So anyways, I want to discuss this, but what caused the big sell-off? And, before we get into the data, let's just take a quick look at some other markets and a price action reaction here. So we saw the dollar index a bit lower here during the day, and then we bounced back towards the end of the day. And if we zoom into price, you can see we came very close to retesting those lows, just around 100.50, let's call it 55. Dollar index moved lower, and what I think a lot of, US dollar or DXY bulls were looking for was just a decisively strong NFP today. And I actually think that, I would say most people said this jobs data was weak. Some people said it was okay, but very few people said it was remarkable, right? There was no remarkable data point reactions. This jobs data was not great. We'll talk about that in just a second. Before I do that, I did mention seasonality, and let me not forget, because I'm assigning myself a bunch of things to look at here. So let me just do one at a time. Seasonality, I mentioned earlier. I want to take a look at the S&P 500 with you guys here on the Edge Finder. We've navigated over to the month of the year trends tab. If you have the Edge Finder, you can check this tab out for yourself. So we're talking about a month that is seasonally for the S&P 500, a not great month. And so seasonality was suggesting, hey, be careful around September, and seasonality delivered. We saw the big slide already. It's possible that we do get a rebound in September, don't get me wrong, but volatility is to be expected. And regardless of who you want the next president to be, that uncertainty certainly also does play a role here. Whether it's Kamala Harris or Donald Trump that becomes the next president, the markets are a little bit uncertain about that, and that uncertainty causes volatility. So that is something to keep an eye open on with the next few weeks. I believe the election is the next 60 days or so. So we will see. But anyways, seasonality, something that was kind of on my radar. And that was part of the reason why I ended up trailing that stop loss on SPX. So just by using data, I made this point in my video on Friday, which was basically, just by taking profits when I did, just by using the data that I just discussed and trailing my stops pretty tight because of it, I was able to save myself thousands and thousands of dollars with the big sell-off that we saw for the rest of the week. So I just want to point that out. The power of data sometimes is not necessarily like, oh, it just magically tells you what the market's going to do all the time. Sometimes it just points things out to you that are very important. Well, the data doesn't point out. You have to look at the data, but being able to easily see the data makes huge differences for traders who are trying to incorporate fundamental analysis. I do want to mention really quick, and a quick pause here, if you'd like to get access to the Edge Finder, you'd like to try it out, there's information down below in the description to either purchase a copy or to get a 30-day trial. Now, please note these trials are not free. We offer a 30-day paid trial for you to try it out and work with a member of our team. If that is something that you're interested in applying for and getting more information about, there's a link down below in the description. The reason they are paid is because there's a lot of effort and time that goes into educating each user of the Edge Finder that would like that sort of approach. And so we do offer that for a small fee. So, all right. Anyways, I want to keep pushing on here. So seasonality was big. We were talking the dollar index, and I jumped places here for just a second. I want to get into the numbers and just analyze for a second what this NFP report was telling us. Was it bullish? Was it bearish? What does it do to the dollar? What does it do to gold? All of those things. And we will get to those things in just a moment. I want to take a look first at the data, and let's look actually here. We'll go line by line for a second and just discuss where we're at. So if we actually you know what, we'll come right back to this page. Let's look first at the NFP report and just kind of summarize our view here. Now, I know it's a little bit hard to see on your screen. These videos I do on the weekend, I don't have the editor to help us out with zooming in and all that good stuff. I do these on Sunday, and he works a standard 9-to-5 job at my company, so we don't have an editor for this video, so bear with me. I'll read it out to you. So basically, the big thing here is that on August 2nd, which was last month's NFP report, numbers came in much lower than expected. We saw basically 114,000 jobs reported last month, and I'll get to why I'm talking about last month in just a second. Compared to the forecast, which was 176,000 jobs, that was a big slide and a disappointment to markets. We then saw this week, right, this past week, we saw a revision. This yellow line that you're seeing drawn across your screen, we've intentionally put that yellow line to help you navigate and understand jobs data revisions, which come out a month after the report to revise the number higher or lower. Usually, especially in the last few years, it's been lower. So they revised the previous number, by the way, guys, to 89,000 jobs. That is a huge disappointment. That means that if we read back on August 2nd's number, they were forecasting 176,000 jobs added, and we only got 89. That's a substantial miss on the jobs data point. We can't overlook that. That is worth keeping a close eye on. And when we got to this week's NFP, or this past week's NFP number, we saw a similar scenario. It wasn't as bad. And the bulls here, or the optimists here in the room are going to say, well, you had 142,000 jobs added. That's much better than the number reported before. And that's fair. That is a fair case to be made. You might say the jobs data missed forecasts, which were at 164,000 jobs to be added in the month of August. Remember, we report the previous month on the first Friday of each new one. So when we take a look at this statistic and you say, okay, we missed a little bit here, but there were still better jobs than last month. That's what the kind of soft landing bulls are going to give you as an answer. Now, let me clarify for a second. I'm still kind of one of them, but I really have to call, an ace an ace, right? And we have to talk about this, and we have to say, well, look, this was a disappointing jobs print. This was also a disappointing jobs print, but it doesn't stop there, right? So when we look at the state of the jobs market, we can't just look at NFP. Let me show you some other things. ADP, which is the private sector, also missed this week big time, right? 144,000 was forecast. We got a 99,000. Well, let's take a look at JOLTS. JOLTS also missed. JOLTS is the job openings posting in the United States. Again, big miss here. Forecasted for 8.09 million. We got 7.67. Big miss. Unemployment rate did, come down. And this is another for the soft landing camp. This was actually a positive because rate cuts are still coming, but they may not be as urgent or emergency because, look, we didn't get a big spike higher in unemployment rate. That would have caused a lot of terror on Friday, but instead we got a trickle lower. So this is where I'm saying the jobs data that came out on Friday was not good, but it also was not horrendous. So there's like a kind of a something for everybody here on this jobs data point, depending on what you want to think, really. Unemployment claims also this week were not super threatening. We didn't get a big spike higher in unemployment claims. So, the jobs data is not great and showing weakness. Nobody would call this jobs data massive growth. Most people would agree that the jobs data is definitely showing signs of cooling, and more pessimistic people would say the jobs market is looking really bad, right? Or it's looking like it's headed off a cliff. And I kind of find myself somewhere in the middle. I think that the jobs data does not look great, but it's also not like absolutely horrendous. So in summary, that's something to think about. So I think that that's why you don't see the dollar index, by the way. Long story short, that's why I think you don't see the dollar index way down into the 99s, right? I think that the Friday data was not good, but it was not so terrible that we need to go, hide under our pillows, right? So something to think about there. That's probably a good explanation, or the best explanation I can give for why the dollar index didn't explode lower here on that data. Let's move to gold. So I do have a current long position on GLD, which is an ETF that tracks the price of gold. I've been trading this one inside of our Discord room. And a quick pause if you're not already inside of our Discord room. Inside of the Discord, you get access to all of our trades and my trade journal. So I have Frank in here. We have Chris, which is a secret new announcement that you guys shouldn't have seen or heard about, but Chris is actually joining the A1 Trading Discord server. So we'll have some information about that on Monday. If you know Chris is a long-term friend of mine in the trading space. We do live streams together. I can't talk too much on that. That announcement's coming out on Monday, so just stay tuned. But anyways, inside of the group, you get access to the trade notifications that we're taking. So, for example, that gold trade I just mentioned, I share all of the entries, all of the exits, complete context and transparency in the group. If this is something that would be beneficial to you, if you'd like to see the trades that I am taking, as well as Frank is taking, you can get access to this down below in the description. It is a paid service, but it is well worth the money. If you're looking to improve as a trader, come join us in the Discord. There's also a discount code down below in the description, and you can see all the trades we're taking, but more importantly, why we're taking them. So that S&P trade, remember I told you I trailed stops, ended up being the best trade of my entire week, was just trailing out of a winning trade when I was supposed to. We failed to make higher highs. We broke support, stopped out for a profit, and that ended up being the best trade of my week. As weird as that may sound, that's what real trading sometimes looks like. It's just knowing when to take a profit and move on. So anyways, you can get access to that down below in the description if that is something that you're interested in. There's a discount code. You can find more info there. Okay, so gold is one that I'm watching inside of the room. We've been watching this one for a while. It's been kind of range bound. And a lot of traders were wondering, why didn't gold rip through the highs on Friday? And I think that, again, we go back to the jobs data point that I just talked about. Was it horrendous? No. Horrendous would have caused gold to probably move higher. Now, there's a pause there I have to take, because last month the jobs data was horrendous and gold moved lower. Somebody called me out on that. I said, Nick, last time, you dummy, last time jobs data was bad and it moved lower. And we got, kind of like the sassy response. Markets are complex and they're difficult. And to anybody who thinks that, it's super, super simple or easy to explain, it's not. Last month, when we had that big August 5th, sell-off, what we started to see was the carry trade unwind, which, long story short, basically people bought back the Japanese yen that they borrowed massively. Hedge funds were borrowing the yen because of its low interest rate and using those borrowed funds to go buy stocks and gold and Bitcoin and everything, right? Well, when the jobs data came out really bad, long story short, many people decided to unwind that trade, or even got margin called into closing out those borrowed yen shorts. I know that sounds complex, but that also caused a great asset sell-off across all markets, including gold, to raise cash in order to raise margin. So that's a kind of advanced answer, and if you want to back up and listen to that again, it's a very hard thing to explain very quickly or briefly like that, but it was a unique situation. And I would say most situations where you get a weak jobs print, if there's not a big carry trade unwind blip that happens in Japan with that, which is rare, usually gold would probably move higher on weak unemployment data. In fact, what did we see happen? We actually saw gold freaked out for a few days and then proceeded to rip through the all-time highs. So I think there was a bit of a delayed reaction, but that is a fair kind of, still analysis to say, well, look, if you get weak jobs data, it's probably going higher because they're going to cut rates dramatically. So I would say that, again, we go back to, was this jobs data point dramatic? And the answer is kind of, but not nearly as dramatic as last month. Last month was just, there was nothing good in sight. Like, you had unemployment rates spiked way higher and jobs added were terrible. This month, again, we go back and we say, look, unemployment rate actually came down. The percentage came down. That was positive for the bulls. For the soft landing people. And then you had terrible jobs added, or just less than expected jobs added, which was not so good. So you kind of had a mixed response for NFP. So where does that leave us? Well, that leaves me in terms of where I'm at. I'm long right here. If we break support, I stop out and it's not a big deal. But if we break through the highs, then I look to start trailing stops. And I've actually mentioned that I'd be potentially interested in adding, if I can get the right fundamental signal on the Edge Finder, for possible longs. And speaking of Edge Finder signals, now would be a good time to just take a look at the top setups page to see what's going on here. Kind of interesting. We've got a lot of neutral readings. A lot of neutral readings right now. Seems like a lot of things are just kind of in limbo here and kind of pending, if you will. We can take a look at the list without the neutral readings. You can see we've got a very thin watch list right now. I imagined that would have changed a little bit more after NFP. Didn't quite change a whole lot. So we still have a thin watch list. And this is part of the reason why, guys, I was very cash heavy going into NFP, meaning I didn't have a lot of positions and I trade on a stock margin account. So, having cash just means I don't have positions open. I haven't bought shares or shorted shares, etc. So anyways, yeah, so I'm watching this and I'm looking for setups, but it's just kind of thin out there. And for me, that's okay. I did make some plays on Friday. In fact, I'll show it to you just for fun. They were not my usual things, but I have been watching a couple stocks. And with this big sell-off, I actually sold ExxonMobil out of the money puts and NVIDIA out of the money puts as well. These are cash secured puts, meaning I'm willing to buy the shares if the market dips lower and collect some premium in the meantime. So I did make some plays on Friday, but it was a really thin week for me, and standing on the sidelines took some discipline. I've been so bullish on the indices recently that I, was tempted. I was like, oh man, I want to buy into this support right away. And I was even tempted, when price was doing this, I was like, oh man, maybe I need to get back into my S&P. Maybe I'm getting whipped out here. But no, I didn't act on any of that. The Edge Finder was not giving me any confirmation. It saved me thousands of dollars this week. As I mentioned earlier, it was the best play of my entire week was just holding still. Don't do anything. Wait for the right setups. And it saved me a lot of money. Money, a dollar saved is really a dollar made. This was a clear example for me. Anyways, I am looking for breakouts on gold to the upside, but for now, kind of still stuck in no man's land on the daily chart. And I think you could get fancy, you could get cute about it and go down to the 4-hour chart, look at this level, but really, we're just in consolidation. If you're a range trader, you've probably been making some good money on gold. And if you're a trend trader, you've either been getting chopped to pieces or you're just like me, you're just sitting there and waiting for it to make a decision. So we will see where price action takes us next on that. Let's keep going. I want to take a look at the euro. So the euro on the daily chart was one that I was looking for long setups, but Edge Finder score kind of fell off, so I'm not quite ready to make any moves here, but I am watching it. Pound USD, bigger retracement could be interesting for possible bullish setups, and dollar yen has me worried, man. Dollar yen, the big slide that happens in UJ or happened in UJ with the jobs data last time around seems to have resurfaced. We're back down near the lows. And this time we actually closed within this wick. So if you're talking to me about dollar yen, I'm worried. I'm worried because I made a claim on one of my videos a couple weeks back that I think gone are the days right now of easy uptrend USDJPY trading. Now, I'm sad to see that go because this was one of my best actual charts. I made the most money on anything I made money in 2022, which was not much. I did not have a good year in trading in 2022. Dollar yen accounted for probably the biggest portion of the gains that I did make. I was very bullish during that time, and if I had just stayed bullish, man, I would have done a lot better. I traded it many times off and on during that time, but anyways, I made a lot of money during that time on UJ. I also lost a lot of money in the indices at that time, but my point with telling you that story is that, the uptrend here for dollar yen has been so dominant, but we have to ask ourselves why, Nick, why are you saying, oh, gone are the days? Well, there's a good reason. During this time, we had high inflation, right? Let's break this down for a second. High inflation caused this chart to trend to the upside. Now, you may also be able to point out that the Japanese economy has not been particularly impressive and that the U.S. economy just is, so much stronger. The Japanese economy pales in comparison when it comes to, that. You can make that case. You can also make the case that, the Bank of Japan is just stuck at permanently being dovish to try and stimulate their economy. But things are changing. Inflation being high in the U.S. is changing dramatically. We will get CPI numbers this upcoming week, which could, cause big movements on this. But the other thing that's changing is that the global economy seems to be cooling off a little bit. And if the global economy is cooling off, people may look to Japan a little bit differently, which has a very stable and sort of consistent economy. Although the Japanese economy is not growing dramatically, it's also not shrinking dramatically, and it has a bit more stability than other places to some degree. So it makes the Japanese yen look a bit strong. And also, of course, I mentioned earlier the carry trade. which is a big thing here, and we'll keep an eye on that as well. But yeah, I would say if you take out the lows here, things are looking real dicey for USDJPY, and could perhaps signal some further downside from here. So I'm predominantly kind of bearish on this one. I'm a bit pessimistic. I'm a bit cautious right now on the whole, case for the soft landing. My opinion on it has, I'm not necessarily like, oh, we're going into a hard landing, but my convinced nature that I've had for the few weeks leading up to this about a soft landing has been greatly challenged by what we discussed earlier. I want to do a quick breakdown with you guys on why that is. Let's take a look. This is the power of the Edge Finder. And again, if you're not an Edge Finder user, I hope that you choose to become one day. It is really a powerful tool, and at this point, it is like my life's work. This is the the cumulative kind of efforts of myself and my team. Frank, who you may know from the live streams, him and I have been working on this for years at this point together to just make it the best possible tool for traders out there. So I do hope that if you watch my videos regularly, we're 25 minutes in, I hope that if you don't have the Edge Finder today, you choose to buy a copy in the future. No, it's not a free tool. I know the whole world wants everything to be free, but this tool is worth the money. We've worked really hard on it. Hope that you consider that. And if you made it 25 minutes into this video, let me just give you a bit of a sneak peek. We got Black Friday coming up, and we will have some really great discounts for the Edge Finder. So stay tuned, be patient, and pick up a copy when that comes around. It will be worth your while. It's a wonderful tool that I think you should get if you're thinking about getting further and further into fundamentals and taking your trading seriously. If you can't wait till Black Friday to get it, there's information down below in the description. And if you let us know, if you chat with us or send us a DM on our website, a1trading.com, let us know that you're interested in just hearing about the best available discounts. We'll get you that best possible discount we possibly can. So anyways, let's go through this together. GDP growth, check this out. Is the soft landing intact or not? I'm going to answer overall, it's still a possibility. It's still likely in my opinion, but it's not certain, and the certainty was hurt by this past week. GDP growth came in better than expected. Okay, that's one for the soft landing bulls. Manufacturing PMI came in weaker, so that's not so good, right? Actual came in lower than forecast. Well, what about services PMI? Services are a big component of the U.S. economy. Well, they came in better than expected. All right, that's good for the soft landing. Retail sales better than expected, so the consumer spending looking relatively good compared to forecasts. We'll give that to the bulls as well. CPI year over year coming in nicely at 2.9% at the last report. We'll get fresh data on that this upcoming week, but for now, that checks the box as well. Core CPI came in a little bit higher, not so good. NFP came in this past time. Actually, this data is incorrect. I got to fix this. Actually should be red, so this should be wrong, or this is wrong. It's actually compared to forecasts, which forecasts were actually like 160, I believe. This 162, something like that, 1,000 jobs. We got 100, so this is actually a bearish one. Unemployment rate also came in lower than expected. That's one for the bulls. So if we just counted that up, right? 1, 2, 3, 4, 5 things for the bulls, 3 things for the bears. Soft landing still possible, right? You got a good mix here. There's more things that you could look at, but the inflation or the interest rates data also showing the 2-year yield is trending lower. We'll take that. So why isn't the Edge Finder getting a bullish score? Well, economic data is not the only thing we look at. We also look at seasonality, which is looking terrible, right? The month of September is historically a bearish month. All right, cool. We have that data. We looked at that earlier. We also saw, we could look at all sorts of different things. We also look at the commitment of traders data. So for the Nasdaq specifically, institutional money seems to prefer the long side based on their positioning, and they also added long. So that was good for the Nasdaq score. You can go into detail with the Edge Finder scoring. It's an algorithm, so it's looking at all these data points and generating a signal for you overall on where it leans. It's not a perfect signal. It's not going to tell you what the market's going to do perfectly anytime. Nothing out there there does. I wish I could give you something like that, but the markets don't work like that. They're all educated guesswork, and I hope that, you know, if you take this stuff seriously, then you embrace that. And if you are looking for a get-rich-quick scheme, which I know you're not if you've made it 29 minutes into this video, then you know that, you know, this is educated guesswork, and that risk management is important because it's educated guesswork. We don't know with certainty about anything in the markets. Anyways, just wanted to break that down. In the soft landing camp, I'm still leaning that way, but I need to start seeing some evidence that the economy is not sliding faster than expected, because we had some pretty bad jobs data this past week. Anyways, guys, that's going to wrap it up. If you made it to the end of this video, do me a big favor and just type the word "end" here in the chat or in the comment section. I really appreciate people who do this. It just lets me know that you watched the full video, and I'm hoping that the video was helpful to you this week, just to get you prepped for the week ahead. And last thing I'll say is that if you're looking for a better brokerage, there's several linked down below in the description that might help you out with getting some nice sign-up perks. There's a bunch of sign-up perks listed and available down below in the description. If you choose to use those links, they are affiliate links, and you'll be supporting my channel, so I really appreciate it. Thanks, guys, for watching. We'll see you next time.